hard not to be drawn into geopolitics, and doubtless fresh policy pronouncements from President Trump will keep financial markets busy in the coming week. But on the corporate front, this is peak season for quarterly reports in both the USA and Europe. Now, the pace here in the UK is a little bit slacker, but we still have an informative week ahead of us, thanks to the following results releases or trading updates. Alamasc on Tuesday the 3rd of February, DCC on the 4th, and Compass, Anglo-American and Vodafone on the 5th. But three other names may write most of the headlines, as GSK, Google's parent Alphabet, and Shell release fourth quarter and full year results. Pharmaceutical and vaccines giant GSK is due to release its figures on Wednesday the 4th, and this is the first set of full year figures under the watch of new chief executive Luke Meals. His predecessor, Dame Emma Walmsley, stepped aside after more than 8 years at the helm late last year, and she has at least bequeathed a share price that's trading near 1- and 5-year highs, even if GSK is yet to recapture its all-time peak that it reached back in 1999. Now, that share price performance of late, at least, comes from GSK's relatively newfound knack of beating forecasts and raising earnings guidance, the last example of which came alongside autumn's third quarter statement. These full-year figures will be benchmarked against that upgraded outlook when Dame Emma pointed towards the following for 2025 as a whole: sales growth of 6 to 7%, core operating profit growth of 9 to 11%, and earnings per share growth of 10 to 12%, with a final quarterly dividend of 16p a share to make for 64p for the year. All of those numbers are on a constant currency basis. Dollar weakness has shaved 3 to 5 percentage points off all of those growth rates, and in headline terms, analysts are looking for sales of £32.5 billion, adjusted operating profit of £9.7 billion, and earnings per share of 170p. Now, of greater import may be Mr. Meals' guidance with regard to 2026, when analysts are looking for growth in sales, operating profit and earnings per share of 5%, 6% and 10% respectively to £34 billion, £10.3 billion and 187p, with a dividend of 67.1p a share. Now, watch out for comments on the trade deal done with the Trump administration to stave off tariffs in return for investment and lower drug prices in the USA, as well as comments on US vaccine policy and the company's own drug development pipeline. Some analysts are also suggesting that Mr. Meals may choose to revisit the 2031 sales and profit margin targets laid down by Dame Emma, which some saw at the time as a bit ambitious. As a final point, note that GSK continues to run a £2 billion share buyback programme in addition to its dividend payments. So GSK may be yet to set a new all-time share price high, but Alphabet has done so with stunning regularity in the past 12 months, helped by strong financial performance and a gathering view that the company could be a likely winner in the race to be a leading player in AI or artificial intelligence. That assessment's based upon Alphabet's fat margins, strong cash flow and deep pockets that can fund the necessary investment, and also the number of businesses it already has with huge user bases, including Gmail, Chrome, YouTube, Maps and Fitbit, and they can provide data that Alphabet can use to tailor AI services. The company also has a strong only position in self-driving cars through Waymo and even quantum computing. The third quarter results were strong thanks to advertising across search and YouTube, something that management partly attributed to AI and better targeted campaigns, and also good performance in cloud thanks again to AI and the world's insatiable demand for data and its storage. Analysts will be looking for more of the same in the fourth quarter of 2025 and any guidance for the first quarter of 2026, where the analyst consensus forecasts are as follows for the results that are due on Wednesday the 4th. Year-on-year sales growth of 15% in the fourth quarter to just over $111 billion, with a 15% increase also seen in the first quarter to $104 billion, and a 20% year-on-year increase in earnings per share to $2.58 in the fourth quarter just ended, and then an 11% year-on-year drop to $2.51 in the first quarter just begun, although that's because Alphabet booked a gain on its shareholding in Elon Musk's SpaceX in the first quarter a year ago, something it also did in the third quarter. Analysts will watch the capital investment budget too, with a view to when the investment in AI will really start to pay off. Alphabet has suggested that spending will exceed $90 billion in 2025, and has thus far declined to comment on 2026, although analysts expect another big jump to around $116 billion in the coming year. Note that the run rate for share buybacks has eased off a little in the last couple of quarters, perhaps as a result of this heavy spending. And finally, we come to Shell, whose full year results for 2025 are due on Thursday the 5th. Despite all the doom and gloom surrounding oil and gas prices, Shell shares are not too far away from their all-time highs. This may be partly down to boss Fail Sawan's ongoing focus on keeping costs, capex and debt down, and his focus on maximising the value of Shell's hydrocarbon assets and balancing that with investment for future growth from renewables. Shell's January update was a bit mixed, truth be told, thanks to a weaker showing in oil and gas trading and tough times for the chemicals business, although lower oil and gas prices bring some relief to the cost base for the refining operations. For better or worse, Shell's preferred profit metric is earnings before interest, tax, depreciation, and amortization, or EBITDA, on an adjusted basis. On that basis for 2025, analysts looking for adjusted EBITDA of $56 billion, down from $65.8 billion a year ago, and that turns into adjusted earnings per share of $3.17, down from $3.73. Keep an eye on capex compared to 2024's $19.6 billion in spending and cash flow, since that cash flow funds the dividends and the share buybacks, which may be providing valuable support to the share price. The quarterly dividend of 35.8 US cents a quarter adds up to $2.1 billion every 3 months, and Shell's fourth quarter buyback was slated to be $3.5 billion. In total, the company probably returned something like $22.5 billion in cash to shareholders last year, or almost 11% of its stock market capitalization as I sit here now. Thank you for watching. I hope that you and your families are all keeping well, and I look forward to seeing you again next time.